Okay, so good morning everyone. Myself Avijit Ghosh, and this is my second video, which will be very much useful for those candidates who will be appearing for interviews after completing their BCom exam or after class 12 examination. And as I told you in my previous video, that candidates are often asked some basic accounting questions to verify their knowledge relating to accounts. So this is the second video, and wherein I'm just going to discuss some questions because it happens that every candidate they get the ready-made answer of each question, but the thing is that if you don't have proper sense of that particular thing, then it's difficult to answer that particular thing. So what I will do in this video, I have taken some questions and answers, and I will explain to you how to understand this particular thing, or how to answer this particular thing, the actual concept, the actual inner thoughts in that question that I'm going to explain to you. So I think this will be very much helpful for you. See, here the first question, as you can see in this PDF, what are the three golden rules of accounting? It's a very common question. It is often asked to the candidate. Golden rules. Golden rules basically, which is also known as British rule. In accounts, what happens? The accountant, the person who is in charge of maintaining the accounts of a business organizations, the accountant, as soon as the transaction occurs in a business, the accountant records that transaction in the journal book. So in a journal book, what happens? A debit is there and a credit is there. Now every transaction involves two heads of accounts. Now the question is, in that heads of accounts, which one will be debit and which one will be credit? That needs to decide. So this golden rule basically helps to decide the debit and the credit one. How to decide which account will be debit and which account will be credit? Simply, I'm just taking an example to make it more clear. Suppose this is a transaction, okay? Wages paid to workers, or you can say wages paid in cash, rupees 30,000. It's a transaction, and this transaction involves two heads of accounts. One is wages, another is cash. Now, one of them has to be debit and another has to be credit. And to decide this debit and credit, the rule which helps us, that is golden rule. So golden rule says there are three types of accounts. The accounts are: number one, nominal account; number two, real account; and number three, personal account. Okay. So the golden rule says if the heads of accounts is a nominal, how to decide whether account is a nominal, real, or personal? If you see that that's our expense or income, then that would be nominal. So nominal will be when that is expense or income. Expense is income, then that would be nominal. Real will be all assets of the business. And personal accounts means the name of any person or any organization, that is personal account. So wages here is a nominal account, as because wages is expense of a business, and cash is real, as because this is assets. Now which one has to be debit and which one has to be credit? So to decide that debit and credit, golden rule is there. So it's nominal, and golden says in nominal account, expenses and losses are debit, as you can see here, and income are credit. So what we will do? We will do wages debit and cash credit. Since wages is expense of the business, so as per nominal, wages has to be debit. Okay, so this way you can say the golden rule is a rule which basically helps us to decide the debit and credit in a transaction. Okay, so how to decide that? Three accounts are there: personal, real, and nominal. In personal, the rule is receiver debit, giver credit. In real, what comes in debit and what goes out credit. And in nominal account, expenses and losses debit, income and profit is credit. Okay, so this is the golden rule, how it is applied to decide the debit and credit in a transaction. I hope this is clear to you. Okay, now come to the next question. Uh, Here is the second question. What are the three main types of accounts? As I already explained to you, three types of accounts are there: nominal, real, and personal. Nominal is all expenses and income. Real is basically all assets of a business, and personal is name of any person or business organizations. So when we talk about real account, examples of real like plant, machine, building, furniture, motor car, these are the examples of real account. Personal account, name of any person, Mr. Ram, Mr. Sham, any organizations like Tata Capital, Vaishnadevi Realty, Tirupati Enterprise. These are the examples of personal account. And nominal account, all expenses of the business like wages, salary, income is like sales, commission received, discount received. That the examples of nominal account. So two questions I have covered, the golden rule and the three types of accounts. Question number 3, why is depreciation not charged on land? Actually, in my previous video, I told you depreciation is a term which is related to tangible fixed assets. So land is a fixed asset, it's tangible. So can we charge depreciation on land? The answer is no. Land is a non-depreciable assets. Why? As because when we charge depreciation, the entire value of an asset is divided by its useful lifetime. When we buy a machine, I'm just taking an example. When we buy a machine, suppose I bought a machine for 1 lakh and I'm expecting that its lifetime will be 10 years. It means every year the depreciation has to be 1 lakh is the total cost of the assets divided by lifetime. So every year the depreciation has to be 10,000. But in case of land, if you buy a land for 10 lakhs, now when we talk about the lifetime, can we decide the lifetime of a land? A land has indefinite lifetime. So since a land has indefinite lifetime, so how we will charge depreciation? Because the assets value, the total cost of the assets needs to be divided by the lifetime. But since for land the lifetime is not available, so it's not possible to calculate the depreciation. That's why on land we do not charge depreciation and we call land is a non-depreciable assets. I hope the concept clear. Okay. Then the next question, amortization. In my previous video I explained to you intangible fixed assets, the reduction of value for intangible fixed assets is basically amortization. Why is closing stock not shown in the trial balance? This is a very important question. Okay, why closing stock not shown in trial balance? Listen, actually, with an example, I will clarify this. Suppose for the accounting year 2022, in a business, total purchase is given. Total purchase is 5 lakh. Now, at the end of accounting year 2022, there is unsold stock, unsold closing stock of 60,000. Now, for this closing stock, we pass an adjustment entry at the end of our accounting year. If it is passed as adjustment entry at the end of accounting year, then in the trial balance, the total purchase we will write because the entry is not yet done. In the trial balance, when we prepare the trial balance, we will see purchase is there. And this closing stock is part of this purchase. 5 lakh was the total purchase, of which 440, cost of rupees 440 is already sold. The goods which remain unsold, that cost is rupees 60,000. Now in the trial balance, when I show purchase as 5 lakh, my total purchase, then this already includes the value of closing stock. So separately closing stock need not to be shown in the trial balance because 5 lakh is already, in this 5 lakh, closing stock is already included. But if this purchase is adjusted means this closing stock is subtracted from this purchase. Then the adjusted purchase has to be 4,40,000. Now, when you will find that adjusted purchase is there, then it is not 5 lakh, it has to be 4,40,000. Then you can show separately closing stock as 60,000. That's why it is said that when in the trial balance purchase is not adjusted, then closing stock will not come. Closing stock will not come as because the purchase itself includes the closing stock. So closing stock need not to be shown separately
As I gave the example, total purchase is 5 lakh. Out of 5 lakh, 60 remain unsold. Now, when you show your purchase as 5 lakh, that 5 lakh already includes the closing stock. Then you don't have to show separately the closing stock. Otherwise, there will be double effect. That's why when entire purchase you write in the trial balance, then closing stock is not shown separately. But when you write adjusted purchase, that means from your total purchase, you already subtract the closing stock and you show 4,40,000. It means that 4,40,000 does not include the closing stock. Then you can show your closing stock separately in the trial balance. Okay, so the rule is like this. When we teach the students, we say, okay, when purchase is adjusted, then you will show closing stock. When purchase is not adjusted, then you will not show closing stock. But the actual logic for showing or not showing the closing stock is what I have just said to you. The examples, if you see, the concept will be clear. Okay, so this way you can explain why closing stock is not shown in the trial balance. Next question, let's discuss the next question. What are the three main financial statements? Financial statement basically includes three things: the balance sheet, the income statement, and the cash flow statement. Balance sheet, which reveals the financial position. At the end of accounting period, every company, every business organization, they prepare financial statements. Financial statements includes, the first one is balance sheet. And this basically contains the details of assets and liability on a particular day. At the end of the accounting period, how much assets is there, how much liabilities is there, that is reflected in the balance sheet of a company. The second document or the second statement, what a company or other business organization prepare, that is income statement or statement of profit or loss, which basically calculates the profit or loss of a business in a year. So income statement is the another statements, financial statements, which reveals the financial result of a firm. And the last one is cash flow statement. Cash flow statement basically shows the inflows and outflow of cash in a particular accounting period. If I consider 2022 is my accounting year, then how much cash inflows are there in the year 2022 and how much cash outflows are there in the year 2022, that we come to know from cash flow statement. So cash flow statement basically helps the users of financial statement to understand the cash position of a company or of a firm. Okay, how much inflows are there, how much outflows are there. And when we prepare cash flow statement, the inflows and outflows are shown under three heads, like operating, investing, and financing. So what happens, we can understand how much inflows are there through operating and how much inflows are there through investing and through financing. And therefrom we can take some decisions, how the particular company is doing, whether it's performing well or not, that we can understand through its cash flow statement. If we find that there is sufficient cash inflow under operating activity, then we can assume that the company is doing good business because it has got good inflows under the head operating activities. So this way the decisions are basically taken the analyzing the cash flow statement. So three financial statements are there: balance sheet, income statement, and cash flow statement. Okay, so this much in this video, and more questions I will be discussing in the coming videos. Okay, so thank you all.